Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 10th of July 2016 and we're providing our gold and silver update for the week ending the 8th of July. Gold rose in US dollar terms last week by $24, from $1,342 to $1,366, having hit a high of $1,375 and a momentary low of $1,316. In sterling terms, gold finished the week at £1,055, up £42, and in euros it closed at €1,237. That's up €31 on the week. Silver rose by 52 cents, from $19.76 to $20.28, having reached a high of $21.12 and a low of $19.10. In sterling terms, it closed at £15.66. That's up 76 pence for the week. And in euros, up 0.61 euros at 18.35 euros per ounce. The gold to silver ratio fell slightly from 67.5 to 1 to 67.3 to 1. The Dow Jones closed on Friday at 18,146. That's up 250 points on the day and up 197 points on the week. And the NASDAQ closed at 4,956. That's up 32 for the day and up 94 points on the week. Brent Crude was down $3.58 at $46.76, and US Light Crude was down $3.21 at $45.41. The dollar index stands at 96.30. That's up 0.65 on the week. From a technical analysis point of view, the gold markets initially fell during the course of the day on Friday, but bounced off of the $1,340 level to form a bit of a hammer-like candle. With this, it appears that the market should continue to go higher in time. However, we also have a shooting star on the weekly charts that suggests perhaps we may need to pull back a little. Having said that, from a fundamental point of view, gold gained 2.31% last week as global stress continued to keep traders in risk-off sentiment. Britain's vote to leave the European Union has certainly stirred the global markets and raised fears over economic stability. Economic concerns and monetary stimulus expectations have reduced the probability of an interest rate hike by the US Federal Reserve, and now there is zero chance of an interest rate hike in July. And we are confident that one can count out August too. The US economy added 287,000 jobs in June, according to the Labour Department, exceeding economic and economist estimates of 165,000 jobs. The strong number helped ease concerns over economic growth in the US, but as the gold prices tumbled, bargain hunters led investors to jump back into the market, thereby supporting it solidly. We expect this week for the gold price to fluctuate a little, but see it gradually move towards that 1400 level, but fully accept that there are a number of resistance points between its current price and $1,400. Silver, from a technical point of view, found support at the $19.25 level and formed a bit of a hammer. There now appears to be an absolute floor at the $18 level, certainly short term, and $21 could be tested again after perhaps a little consolidation. Whilst we are still bullish the precious metals because of the Brexit uncertainty and the possibility of a recession in the UK and Europe, we have also to balance the longer-term effects of a recession on the demand for industrial metals such as silver. At the moment, it is supported by investor demand, and that bodes well. However, looking into and on towards 2017, we have to keep our fingers crossed that a recession does not deepen further, in which case the demand for silver will rise further. Investors must also now bear in mind that silver at these levels is profitable for almost all mining operations, and we should not be surprised to see closed seams being opened back up and supply beginning to increase again. And it is for these reasons why we do not share the view of some of the pumpers who claim silver is going back to $50 an ounce anytime soon. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/illuminatisilver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.